Hey guys, welcome back to my channel. I am Joy Bailey, the mortgage boss, where I give real estate advice for real people going through real life, because you know life be life. And listen, today I want to talk to you guys that are first-time home buyers. I want to tell you the top 5 things that I think you should know before you go out finding a property. First thing that you should know before you go and try to talk to a realtor, you need to talk to a loan officer. I wonder who you should talk to. Maybe, I don't know. Loan officers' jobs are designed to basically get you ready and able to purchase a home. A realtor's job is to only talk to people that are ready, willing, and able. So that means you should not contact a realtor with your wish list of, oh, I found a $600,000 property. I make $3,000 a month. Can I go look at it? They don't want to hear from you. They are not interested. And I'm not trying to be mean or anything like that, but I promise you one thing that you're going to get from me every single time is going to be the truth. I'm going to tell you what we're saying about y'all behind your backs. They don't want to hear it. So talk to a loan officer first before you talk to anybody else, because the reality of it is we talk to people all the time that have absolutely no chance of buying a house at least for 2 years. So please, please, please talk to a loan officer. Have them take a look at your credit, income. They'll tell you what your game plan is going to be. We'll talk about, how much money you need to save up, all of that jazz. Which leads me into thing number 2. How much money do you need? All of the money. Contrary to some people's opinions, you should not go into a home barely qualifying for anything. Again, I'm going to tell y'all the truth. I ain't going to lie to you. I'm telling you, so many times transactions fall apart, all because the person does not have enough money. You not only need money for your down payment, you need money for your closing costs, and you need to have a little extra money left over for reserves and, just in case something pops up along the way. Almost all the time, whenever we come into issues regarding somebody purchasing a home and the underwriter's giving pushback and saying, well, this isn't working out, 9 times out of 10, if that person has a little extra money, they can pay down a debt. They can add more money to their down payment. They could do a lot of different things that's going to be able to get them to the closing table for their home that they have now become emotionally attached to. So how much money should you have? All of the money. How much is all of the money, Joy? It is advised that you have about 7% of whatever the purchase price of that home is. That's going to be enough money for your down payment, which can be as little as 3%, all the way up to, having the full 7% if your closing costs are, more than 2 or 3% of that loan amount. It is going to vary from, municipality to municipality because the title and taxes that are involved in the property. Generally, though, 7% is probably going to be way more than you're actually going to need. Thing number 3 that trips people up a lot of times when they're first-time home buyers is that a lot of information that we've been spreading on the internet has been buy the house and date the rate. That's okay, but generally speaking, nobody can promise you that you can refinance. If you go into a property assuming that you can refinance and you're being super, super aggressive with your finances to be able to get into that home, you might be uncomfortable a lot longer than you intended to be uncomfortable for. I have a separate video that I'll, insert so that you all can watch that to talk about all of the reasons why a refinance might not be able to happen for you. But the biggest thing that people always assume is that, oh, I could just refinance. And that is not true information. So please be careful about how much money and how aggressive you are going to be going into your new property. Number 4, how we calculate your income is not how you calculate your income. Sometimes I'll have somebody come to me and say, well, Joy, I make $5,000 a month, so I should be able to get a payment for $3,000. That is not true. We are only going to give you roughly half of your monthly income to go toward whatever your debt is. And if you are including bonus income or overtime income for a job that you have had for less than 2 years, we are not factoring that in. So in your mind, you might make $5,000 a month because you actually do make $5,000 a month. But if you're getting $1,000 a month because of a bonus and or overtime, we are not going to factor that in. Again, if you have not been on that job for at least 2 years. So the amount that you qualify for is going to be drastically reduced now because there's a whole $1,000 a month that's hanging out there that we cannot count. So before you assume, please, 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 back to number one, talk to a loan officer first. Lastly, I love talking to borrowers that have done their research. Y'all, you don't understand how much it warms my heart to be able to enter into a conversation with somebody that has watched YouTube video after YouTube video after YouTube video. Usually, if I'm being completely honest, they have all their ducks in a row. They have their credit. They have all of the money available for their down payment and closing costs, because that's generally the message that a lot of us are preaching. However, here's where the problem comes in. Y'all be thinking y'all loan officers, and you're not. Not only have you watched so many YouTube videos, you're going to try and tell me how to do my job. Y'all try to tell the realtors how to do their jobs too. My advice to you, let the professional be the professional. Let them do their job. Allow them to work in the specialty and the discipline that they have been, practicing for 2, 4, 6 years, a decade, however long they have been in that industry. Let them be the professional and guide you in a good experience so that you're not, giving too much pushback and they don't hate you. Because I will be honest with you, y'all don't realize it, but sometimes we will fire you as a client. Yeah, we do that. So don't be the person in that situation. Be the good client. Be the one that came prepared, the one that we brag about, and the one that we tell everybody, be like this person, okay? You don't want to be the bad story. We saying, oh my God, you won't believe what this person told me, okay? So that's everything, y'all. If you found these tips helpful, give me a thumbs up. If you're new here, please subscribe. I would love to hear anything that I might have left out. Give me some comments down below if I might have left out anything that you feel like a first-time home buyer should know. Until next time, I will talk to y'all later.